What's up, guys? It's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Alphabet, more commonly known as Google McDougal. Ticker symbol GOOGL for Class A shares, trading for $1,500 a share as of July 6, 2020. Equating to a market cap of $1 trillion and a PE or price per earnings ratio of 30.6. Yes, Google has had a 40% rally in the last few months, which is nothing to scoff at. It's just interesting to point out that Google is the only FANG stock, which of course includes Facebook, Amazon, Apple, and Netflix, that hasn't recovered and surpassed its pre-pandemic levels. So what's the move? Are we going back to the ABCs of investing or saying goodbye to Google? This is your quick stock analysis. For transparency's sake, we have 6 shares of Alphabet in our quick stock long-term portfolio, equating to around a $9,000 position. Let's start this video off by taking a look at Alphabet Inc.'s ecosystem to see if we can get a better valuation of the company. It only feels right to start with YouTube, which generated nearly $5 billion in ad revenue in Q4 2019, representing $15 billion in revenue for fiscal 2019, which was a 36% increase from 2018. YouTube's premium subscription service that includes YouTube Music has reached well over 20 million subscribers, which is not even included in YouTube's $15 billion of advertisement revenue in fiscal 2019. I'm sure I don't need to tell you, but YouTube is a behemoth, which has spread like wildfire in the last few decades around the globe. To quickly note the bear case, yes, YouTube's history has been riddled with lawsuits and controversy, but it's arguably the best source of entertainment and education that mankind has ever known. And yes, one day YouTube will die, but in all honesty, besides a serious database crash, it seems YouTube will be a cash cow for at least a decade to come. Just to put this into perspective with how much of a cash cow that YouTube actually is, Google takes a 45% cut of all YouTube advertising just for hosting the platform. Anyways, I could keep going all day, but let's keep this video going, and next, take a look at Google's smart home brand. Google offers a wide variety of products to help turn your home into a smart home, including speakers, displays, streaming devices, smoke detectors, routers, and security systems including doorbells, cameras, and locks. They also offer the Nest thermostat, which really is top tier. Yes, it's only a thermostat, but Google Nest is becoming the standard for new installed AC and furnaces. Just let that sink in. Google makes a $200 thermostat that has become the industry standard. A decade ago, the idea of a $200 thermostat gaining any kind of traction would have been laughable at best. But for real, I'm convinced that smart products will be in almost every developed household in the future. The global smart appliance market is worth around $40 billion and growing at roughly 17% yearly. However, to note the bear case, a majority of this growth is coming from China, which Google has struggled to crack the market. Anyways, moving on. Next we have Google Search, which generated $98 billion in 2019, which represented a 15% increase. Google processes over 40,000 search queries on average every second, which equates to over 3.5 billion searches per day. And of course, this brings in money because of ads, which generates a majority of the company's total revenue through their companies like AdWord, AdMob, AdSense, etc., which amounted to $134 billion in revenue in fiscal 2019. And the beauty of Google's advertising is that they've already incorporated it into a majority of their existing ecosystem, which is great because the total US online advertising revenue is expected to reach around $275 billion in 2020. Of course, giving Google tremendous opportunity, with the company having around a 37% market share. And of course, Google is a global player that will benefit as more people gain access to the internet. Next, let's take a quick look at smartphones. It only makes sense for one of the largest players on the internet to have their own smartphone. It makes it easier for them to create an all-in-one experience after all. In 2019, Pixel sales were estimated to be between 10 to 12 million units. As Google doesn't release exact numbers, it's hard to say with any great certainty. What we do know, it's actually a miss in regards to analyst expectations. If we look at premium smartphone rankings by region in 2018, we see that besides in North America, Google isn't available or popular around the world. Granted, I should note that Google's new flagship phone, the Pixel 5, is expected to be released in October of 2020. Of course, the Pixel 5 will have 5G connectivity, which should help the company maintain its momentum. Granted, if I'm being honest, your reporter here at QuickStocks is a Pixel user and enjoys using the phone, but it seems as if the Pixel still hasn't been able to crack the Apple, Samsung, Huawei lock on the market in a meaningful way. Leading into our next point, of course we have Android and the Play Store with over 2 billion active devices running on Android and a 75% market share when it comes to worldwide smartphones. Which is absolutely bonkers to think about. As Google does not release Android data separately, it's hard to say its current value, but as of January 2016, Android had made 22 billion in profit. Next we have Google's self-driving cars, Waymo. Google's self-driving car project valued at roughly $100 billion. Self-driving car units could generate as much as $114 billion in revenue by 2030 through ride-sharing services that allow customers to book a ride through their mobile device. The thing is, Google and DeepMind are one of the world's leaders in machine learning, so one could argue that Waymo should become the leader in self-driving cars, right? But it's been a bumpy road for Waymo, a company that was once valued at over $200 billion only 18 months ago, now has a valuation of $30 billion. Of course, this technology is a competitor to our boy Tesla and Nvidia and a bunch of other companies. But currently Waymo's annual cost is nearing $1 billion, while its taxi business generates a laughable few $100,000 a year. Of course, self-driving is still a battleground with a golden ticket presented to whoever can cross the finish line first. But investors in Google should expect this to be a drag on the company for at least a decade to come, but especially in the next few quarters, as Waymo had to shut its doors for a few months during the global pandemic, which is a shame because, in theory, it seems like it could have been a time for the company to shine. Next, let's take a look at Google Stadia, whose goal is to bring A-list games without a console or download, which is undoubtedly the future of gaming. It's just hard to say if Stadia will be that company. As of 2020, Stadia has been a drag on investors. It's just Google Stadia never took off like the company had hoped for, and has had to consistently drop prices to attract customers. And it's still a lonely place for the cloud gamers on the Stadia platform, considering Google has quite the track record of dropping projects that don't instantly blow up. It's hard to say how long Alphabet will continue to support an unprofitable platform, which could certainly rub some users who already purchased games the wrong way. This video could go on all day as Google owns hundreds of companies, so I'm just going to briefly mention a few of Alphabet's other projects that represent a huge catalyst for the company. Firebase, a mobile and web application development platform. Makani, which is a leader in developing airborne wind turbines. Stackdriver, which is a hybrid cloud solution. Calico, biotech company focused on health and well-being. DeepMind, an artificial intelligence company, which you can see it's AI learning to play Atari Breakout. Yep, that seems like a good investment there. Like I said, as crazy as it may sound, this is still just a fraction of Google's ecosystem, with hundreds of companies I won't have a chance to cover. Realistically, with our life becoming more ingrained with technology and the internet, it seems as if Google is one of the companies posed for another great 20 years. So with all of this in mind, what's our move? With a strong backbone in Google Search, machine learning, AI, and YouTube, along with all of the other side projects, it would be a fair argument to assume Google is posed to outperform the market for another decade to come. In return, massively rewarding long-term investors. However, pump the brakes, we have seen countless failed projects from our boy Google. The thing is, remember, Alphabet is already a trillion-dollar company, meaning it's really hard for the company to make a large splash from a revenue standpoint. But investors can rest easy, knowing regardless of short-term market noise, their investment in Google gives them market share in some of the most interesting marketplaces around the world. In a silly hypothetical, if I had to put money into an investment for the next 2 decades without worrying about it, I would choose the ETF QQQ. But if for some reason I had to choose a single company, Google would be a great choice. Obviously, this isn't our trading strategy here at Quick Stocks, as we reevaluate our portfolio every 6 months. But it does show how here at Quick Stocks we believe in the long-term prospects of Google McDougal. However, with nearly a $10,000 position in Google, which makes up about 3.5% of our total portfolio, I'm not really interested in increasing our cost basis, unless we see a sharp pullback to the $1,000 range. But on the other hand, unless something in the company fundamentally changes, I will be holding on to our shares for a decade to come. Anyways guys, that's all we've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 620 subscribers and plan an early retirement. I will catch you guys in the next one.